assessment of companies. I'll solve one question. Maybe it will cover 90, more than 95%. For section C, if they lost normal provision, this much only. If they lost MAT provision, this much only. So half. If they lost 115 JB, then you do both these things, normal provision as well as MAT provision. MAT means what? Minimum alternate tax. That is MAT provision. There is no huge difference between normal and MAT provision. So we have to pay minimum tax. That's we are calculating. Company has to calculate both normal as well as minimum alternate tax. See, I'll show what is difference. First, I'll read out the question only. Computer tax liability of Sri Hari and Company in view keeping the provision of MAT. So MAT is given. So cost of goods sold, that is purely related to business, salaries, administration expenses, other expenditure, depreciation. First we are treated as inadmissible, then we are subtracting according to IT. Repairs also business. Proposed dividend, so it is not business expenditure. It is non-revenue, so we'll add. So proposed dividend, it is not related to business only. Provision, this is also not related to business. Provision for contingent, both are not inadmissible, so that is not related to business. Here, sales, so we are receiving one more in long-term capital gain. There is no interest on security. This is all interest on security, government security, interest. Income from other sources. So LTCG, long-term capital gain. First we are subtracting this because it is not related to business only. Later, total taxable income of the business, total taxable. Then we are adding all. So that means income from house property, income from business, income from capital gain, income from short term, income from other sources. We are adding all. So this also we are adding. Here, the amount of depreciation admissible is given. IT Act. So this is not given. So we'll treat at both. IT depreciation 15 lakh. The amount of depreciation admissible under the IT Act. So that is admissible only. So I am adding same amount, subtracting same amount, because no amounts are given here. So brought forward expenses. So brought forward loss. So we if any loss of previous that should be carry forward. So in income tax one chapter is there, carry forward. Thus we are carrying here. So brought forward loss is 4,50,000. That is books of account. So books of accounts we are subtracting in MAT problem, minimum alternate MAT provision. So not here. So under MAT provision, we are subtracting brought forward losses and unobserved depreciation. Unobserved means what? Last year they are not observed. They are not given depreciation. So here that amount is not there. So if there, we'll compare these two. So brought forward losses and unobserved depreciation in the minimum alternate tax. There we are comparing whichever is less, that we are writing. Whichever less that we are writing. So next to IT Act is IT, according to it is given 6 lakh and 1,50,000. Both will add and subtract. That is normal provision. This is the only difference. The major difference is this only. And one more thing, if any expenditure related to penalty of tax, that we are adding here but neglecting there. That is the only difference. Now, already I did some, I'll explain. So, this is normal provision. Net profit as per profit loss account, that is given in question, 21,95,000. So, depreciation 15 lakh. So, they are telling IT also same. So, that's why I took IT also same. Depreciation as per IT 15 lakh. Provision, I said, is not related to business. Provision for taxation also proposed dividends. So these four are inadmissible. So if I add, total should be 45 lakh 75,000 on that admissible expenditure that is not given in profit and loss account, and non-business income we are going to subtract. So depreciation as per 80 15 lakh, they said that only. So this is related to 80 only. So 15 lakh, both I did same amount because they are dealing that only. Long-term capital gains, that is non-business income, so 3 lakhs. So totally 18 lakh. If I subtract 27 lakh 75,000, I said according to as per IT, brought forward unobserved depreciation, brought forward business loss last year. So we are not provided. Totally 7 lakh 50,000 I subtracted. This is income from business. Maybe the last income from business, you should calculate this only. Total income, add that also. In question there, what they are telling, long-term capital gain, it is exempt there given in question. That's why total taxable income, income from house property that is not given. If there you write, whatever further expenditure you subtract also. Standard deduction and expenses related to house property, that is subtract. Total amount income from HP right here after adjusting all that expenditures. Income from business, that is we calculate just now 20 lakh 25,000. Income from capital gain, this is totally exempt, so that's why I'm not writing. So in question that is given 3 lakh is exempt from tax. If not there, you calculate that also. Income from other sources, total should be this only. Deduction is not there, so 20 lakh 25,000 is total taxable income. Now we are calculating tax liability under normal provision. Taxable business, total taxable business income 20 lakh 25,000. In the assessment of firm, that is 30%, here 25%, that is the difference. 20 lakh 25,000, 25%, this much. So surcharge is not there, so that should be more than that. So add health and education cess, 4% of this tax, 4% of 5 lakh 6,250, 20,250. This is tax liability under normal provision. Maybe they'll ask this also for section C. Now MAT provision, I said here penalties is not this, so I am not writing anything. Same as it is, 23 lakh 80,000, same as it is. This also same. Here I said whichever is least. So brought forward unobserved depreciation, brought forward business loss. So we are comparing whichever is least. See from these two, here nil. So least is this only, nil is least. So 27 lakh 75,000. Under MAT, it is rate is 15%. So 27 lakh 50,000 into 15%. This one surcharge, that is not more than that profit. Add same health and education cess for 4% of 4 lakh 16,250. So 62,438. If I should add, this should be tax liability under MAT provision. So by comparing these two, normal this one, normal tax liability 5 lakh 26,250 and MAT provision 3 lakh 53,813. Whichever is highest from these two, so that should be tax payable by the company. Highest is 5 lakh 26,500. So this is tax payable, total tax payable by the company under MAT provision.